Hi, I'm Kuang Chuan from Lenovo Malaysia. You are watching the weekly review on channel 127 UniFi.
Hi, welcome back to the weekly review, your business and finance guide with me, Nora. Alright there, so the world is going through a sluggish performance and every country is up tiptoeing as not to make the wrong move in managing their wealth and inflation. As for Singapore M.I.D.F, Amanah Investment Bank Berhad M.I.D.F Research said, though the market performance is bearish, the country is taking steps to cushion the economic blow.
MIDF Research said Monetary Authority of Singapore MAS has more room to maneuver to counter the global headwinds as the inflation eased to its lowest level in nearly 2 years in August. It said with inflation heading in the right direction, MAS will most likely slow down the Singapore dollar's rate of appreciation, a move that will help exporters to become more price competitive at a time when global demand is slowing. The research house said August Consumer Price Index rose by 3.9% year-on-year, after rising by 4% year-on-year in July, which turned out to be the lowest rate since November 2010. Meanwhile, core inflation, which excludes accommodation and private road transport costs, fell to 2.2% from 2.4% year-on-year in July. MIDF Research said food prices remained stable at 2.3% year-on-year for the third consecutive month, while the increase in housing prices eased from 6.4% year-on-year in July to 6.1% year-on-year in August. But transport prices went up from 5.7% year-on-year in July to 6% year-on-year in August, and was due to a surge in the cost of certificates of entitlement in August. Now, the research house said that the inflation trend is heading in the right direction and expects the headline inflation to be a little bit sticky downwards going forward. MIDF Research also added that the downside stickiness of inflation could come from base effect from the discontinuation of service and conservancy rebates, volatility of COE premiums, and U.S. Fed quantitative easing, which is more likely to be reflected in 2012. Although inflation has fallen to a low level, and at the same time it expects downside stickiness to inflation, MIDF Research is yet looking at the increasing possibilities for MAS to probably slow down the Singapore dollar's rate of appreciation. Now, this will help exporters to become more price competitive at a time when global demand is slowing. MIDF Research added MAS could widen the Singapore dollar band, which is nearly at the top end, a move that it will provide greater flexibility.
No, I think generally the basic food prices have come off. You see the global oil prices have come off quite well.
Okay.
And what you notice is that since the global oil price is down, the food price is down, generally the trend of the inflation is coming off quite well. It's also because of the monetary management that they have adopted.
Okay.
Okay, the monetary management here is that the way Monetary Authority of Singapore has been managing the things.
Okay.
But having said that, also we did caution to say that going forward, there is a possibility that inflation can actually pick up a little bit, coming from the transport. The COE, the premium, the premium on the side, and also from the QE, US QE. We think that commodity prices will be going up. That might actually come in at the end of the year.
Okay.
And also probably from the rising oil prices.
Okay.
Right. When we say sticky downwards, you don't really expect the CPI prices to go anything below 3.9 kind of level. It's a bit tougher for inflation to go anything lower than 3.9.
Okay.
So 3.9 should be almost the trouch, the bottom of the Singapore's inflation.
Okay.
Okay, what happens here is that if the Sing dollar starts to appreciate too much, then your cost of imports come down.
Okay.
Because now in Singapore terms, because the Singapore currency is appreciated, so your cost becomes cheaper.
Okay.
But what happens now is that you may lose in terms of your export competitiveness because your exports become expensive. So now with the inflation coming down, so what can happen is that MAS need not really move into a policy whereby they to allow the Sing dollar appreciate very fast.
Okay.
So when they don't do when there's such kind of policy is being adopted, so what happened now is that exports become fairly more competitive.
Okay.
And since your inflation is coming down, you can afford to have a little bit of imported inflation even if it comes in.
Okay.
So that's what we're saying, that the policy could be such that they may actually slow down the appreciation of the Sing dollar, and also probably widen up the trading band of the Sing dollar against the major currencies.
Well, that was MIDF Research Chief Economist Anthony Das giving us insight on the Singaporean market. Right then, Weekly Review takes a short breather. After the break, Palestine invests or not to invest? With His Excellency Abdulaziz Abagush. Stay tuned with us.